And thanks for staying with us, everyone. First up, government is unlikely to issue Eurobonds at attractive yields in the short term, even if it secures an International Monetary Fund support program this month or in the next couple of months. That's a session by Fitch Solutions. According to the international market and research firm, the IMF program would only finance a portion of the targeted fiscal deficit. Here's more in this report.
In its February 2023 Africa Monitor report, Fitch Solutions said the rising interest rate, which has been hiked to 28% at the beginning of last year, make domestic borrowing more expensive, given that Ghana already faces elevated interest payments and that a substantial increase in domestic debt issuance would weaken fiscal dynamics further. Furthermore, the domestic debt restructuring would make domestic banks more cautious in lending to the government this year. Nonetheless, Fitch Solutions said the government expansionary spending plans will result in a rising public debt in relation to the size of the economy. Indeed, it expects a total public debt to reach 83.8% of gross domestic product in 2023. It's concluded that the public debt to GDP ratio will continue on an upward trajectory until 2028, after which it will start to moderate.
Well, meantime, Ghana's Eurobonds extended declines on Wednesday after the country missed a self-imposed deadline to restructure its bilateral debt. The nation's 2032 securities dropped, bringing the decline this week to 1.7%. Joining us, Dennis Brown, Senior Manager, Financial Advisory at Deloitte, Ghana. Thanks for your time, Dennis. Good to see you. What are the implications of this?
Hi, Daryl. Thanks for reaching out again. I think the implications are particularly dire for investors who hold these bonds, because what it simply means is that the price of the bonds they hold have dropped, so they are losing value. So that's the implication for the investors. For government and our economy, it only means that investors are losing confidence in our economy. If government were to resort within the very short term to the Eurobond market, they are probably going to do that at an unattractive rate, or they will not be able to raise the amount that they need.
And it appears government's efforts to restructure our bilateral debt is taking quite some time, which could affect how soon we secure an IMF program. What do you see to be the constraints?
Well, I think particularly for bilateral debts, right? Negotiating bilateral debts it's not a simple thing because of the dynamics involved. In fact, I've been reading around and listening around. I see that you could categorize them into two components. There is what we call the Chinese debts and also the Western debt, right? Typically, these two groups are, peeping at each other, looking at what terms you want to negotiate with them, and they all have their interests that they are pitching as well. So it's very difficult to isolate them one after the other and to renegotiate, your bilateral debt. Each of them would want to see what you are doing with the other, and all of these dynamics are playing out. And you can imagine that it's not a simple process at all, and that's what has occasioned the delay as well.
Well, just yesterday we had the president, or was it a couple of days ago, had the president talk about talks with the Chinese government and how he thinks that the talks are progressing as positively or smoothly, if you like. I don't know what you think would be the outcome, whether or not China would forgive our debt. What would be their consideration as they engage in these talks?
Well, from what I understand about geopolitics and all this global economics, I don't think anything comes free. I'm sure China will come to the table, but they will come to the table with some conditions. As to what those conditions are and whether they will be favorable to us, I can't tell for now until we have details. But though I'm sure there will be some, considerations for government to look at and to see whether, that favors us or not.
Yeah, and so that takes us back to my our top story today. You even alluded to that, Fitch suggesting that government is unlikely to issue Eurobonds at attractive yields in the short term, even if the country secures an IMF deal next month or even this month. Is this something to expect, and could there be other ways to whip up investor interest?
Yeah, I think they may not be far from right. I mean, I'm sure they are also looking at what is happening now. And I have always said that, look, the IMF deal in itself, the package in itself is not the solution in its entirety. It only communicates some level of confidence to investors that, look, IMF wants to play ball with you. They must have reviewed your debts. They must have reviewed other aspects of your economy. They must have looked at your policies and are confident they can work with you. And so that sends, positive messages to the international investors and for them to, come on board. But it's not going to happen overnight. It's not as if we receive the 3 billion today, tomorrow all our economic challenges are gone. So investors are still going to play some wait and see approach. They are going to see how you do on the program, and they are going to also look at the indicators. They are going to pay attention to the credit agencies and what their revised ratings of you will be post the IMF deal, and use all of that to, inform their decision. So it's not going to it's not likely to happen within the short term if we were to go to the Eurobond market to be able to issue, the Eurobonds at, the attractive rates that you used to previously. Yeah.
Well, I don't know if Deloitte Ghana has done any analysis on this, but we're in March already. And so we're just wondering, an IMF program, is it likely this month?
We have not done any analysis on it. We, like you, have also heard the president mention that, and he said it confidently that they'll conclude the IMF deal in March. I don't know what they've seen. Maybe after their bilateral engagements, something very positive has happened. But I guess we have to wait for the details. I think that it's a tough ask because as far as I'm concerned, there's a whole foreign debt component to restructure, including, the Eurobonds and all that. And I'm sure the foreign creditors have also put a contingent together to discuss with government. So I haven't heard anything of that. And that together with the bilateral debt negotiations, not much progress have been made there as far as I'm concerned. So unless they are seeing something, that we can't see from where we are, I can only assume that the president's words, means what they ought to mean.
Well, the IMF has indicated that commitment from Ghana's creditors is key in securing the deal. So let's see how that goes. Thank you so much, Dennis Brown, Senior Manager, Financial Advisory at Deloitte Ghana. Appreciate your time with us this afternoon. All right, so the Bank of Ghana has indicated that it will take the required measures to prevent any bank from going down as a result of shocks from the domestic debt exchange program. This follows recent industry data showing significant reduction in banks' profits and more than 5 billion cedi non-performing loans being written off as bad debt. Now, at an induction ceremony of the Ghana Association of Restructuring and Insolvency Advisors, the central bank indicated it is closely monitoring banks as liquidity pressures mount.
Assessment by the Bank of Ghana indicates the emergence of signs of spillovers from the current macroeconomic conditions characterized by high inflation and rising interest rates. In particular, pressures of insolvency and liquidity have increased, and the bank is closely monitoring these developments. Addressing members of the Ghana Association of Restructuring and Insolvency Advisors, head of resolution at the bank, Elliot Amwaku, hinted that some relief measures have been lined up for the banks to moderate the potential impact of the domestic debt exchange program and ensure stability in the sector.
The bank's macro-prudential risk assessments of the banking sector indicated the emergence of signs of spillovers from the current macroeconomic conditions, characterized by high inflation and rising interest rates to the banking sector. In particular, pressures on solvency and liquidity of banks have increased, and the bank is closely monitoring these developments. Already, some regulatory relief measures have been lined up for banks to moderate the potential impact of the domestic debt exchange program and ensure stability in the sector. These trends require close monitoring to avert insolvency in some institutions.
Chief Executive of the Association, George Fosu, explained to Joy Business about the importance of the induction ceremony.
This ceremony is quite important in laying the foundation stone. The second important aspect of the ceremony is the publicity to allow businesses right across the country, across the nation, to know that there are specialized professionals who can help them and assist them, particularly around this time. It's absolutely important that entrepreneurs know that they're not alone, and that's why we are here.
The association is made up of professionals with an interest in restructuring and insolvency. In all, about 274 members were inducted.
Let's discuss this a bit further. Joining me on Zoom is financial analyst Christian Tichijan. Appreciate your time, Christian. So I want to start with the Bank of Ghana report released a couple of weeks ago showing a significant decline in the profits of banks. So we are seeing the economic crisis already having a toll on banks, right?
Yeah, exactly. Good afternoon, Daryl. Thanks for having me on your program. Definitely, the 5 billion non-performing loans, definitely it's going to be written off against the books, and this is against the income of a lot of some of these banks. Ultimately, it's going to affect the bottom line as well. Last year, arguably, was one of the most challenging years in our economic history. Cost of borrowing was very high. The forex market, I would say, more or less crashed. Inflation was also very high, and a lot more worse conditions. And the businessman, as an economic player, definitely was also challenged, and it was very severe. It had a very big toll on their business activities and their operation. Utilities were so high. So it's no surprise they weren't able to pay their loans, hence the 5 billion NPL, which the industry actually recorded. And this will also culminate in their knockoff against their P&L. So far as it's going to be knocked off against the P&L, we expected that their profit after tax definitely, or profit before tax, was going to go down.
And how does the domestic debt exchange program further aggravate the situation?
Yeah, it is indeed. If you check the press release by the Ministry of Finance somewhere in December, it made some categorical points. It had definitely a toll. We knew the program was going to have a toll on the liquidity of some of these banks because if you check maturing investments from the government bonds, they were not going to come through. Meanwhile, they were going to pay same to their customers. The customers that had invested with them, they were going to pay same to them. So far as they weren't going to get what was coming from government, and they had to pay to their customers what had already been invested with them, we expected that there was going to be a toll on their liquidity, and then that also culminates into their solvency program that they have. But let me stress that the government of Ghana, if you check the December, I think 29th press release, the government had a number of points that they had wanted to raise to actually help them. If you check point B, potential impact on debt exchange on financial sector, and then point C, the regulatory tools to mitigate financial stability risk from the debt operation. There's been some measures that's been put in place that we expect that already there's been the financial sector stability fund that's expected to have the 15 billion CD fund, in revolving. So the government actually anticipated it, and there's been measures. We just know that some of these things, as soon as they come into play and they begin to show signs of liquidity challenge or solvency, this fund will complement the already framework that Bank of Ghana and other regulators have got in ensuring that they stay liquid at any point in time.
And so when the central bank says they are closely monitoring banks, what exactly are they doing? What exactly are they looking out for?
Yeah, again, if I refer us to that press release, there was commitment from government, and consequently, the Stability Fund was established. What is required now is a continuous monitoring of the financial institutions on their liquidity as well as their solvency positions, and already the frameworks have already been established, and they've started working with them. What I would say is that they should continue to review and recalibrate as needed to ensure that maximum effectiveness to safeguard the stability of the financial sector is actually achieved.
So these points that the central bank outlines, for instance, to deal with whatever shocks would come as a result of the domestic debt exchange program, are they strong enough? I mean, do you have confidence in them?
Yes, absolutely. Because reporting that used to be once a month is now being done on a weekly basis, and that is to give keen attention on the day-to-day. Now it's being reported every Wednesday, and it gives them a fairer idea of what is happening within the week. So hitherto, what was being done within a period of about 30 days. Now it will take just about 7 days. Or the maximum 5 working days. And then if there are any loopholes, it will be established or it will be laid bare, and then the necessary mitigations could be propounded to ensure that it doesn't aggravate to situations where it becomes too challenging.
Yeah, and we know that the banking sector has been through so much in the last few years. And so how can the central bank manage message and communication to the public so that people do not panic?
Yes, I would say the financial sector has been one of the sectors that's gone through a lot. If you check 2016, 2017, some even had to be closed down. It's actually had a lot of negative publicity. We're beginning to see some traction in terms of confidence being won back. And now we have this challenge where people no longer trust the financial sector. I think it must continue to do its job of continuous monitoring. So far as no financial institution experiences liquidity challenge or solvency problems, we should be good. I'm sure once the IMF deal also comes in, people's mind will be put at rest. People who have got investments, whether treasury bills, whether fixed deposits with the banks, I mean, they will begin to have confidence to know that we have some policy credibility that is being assigned by the IMF. So far as their monies remain with the banks, they remain intact and they remain very stable and secure.
Well, aside from the measures put in place by the central bank, what can the banks do themselves to stay afloat, to stay profitable?
Yes, there's been a trend now. Previously, the banks were actually competing fervently with the government in terms of treasury bills. T-bills, some of the banks were doing about maybe T-bill -2 or T-bill -3 in terms of their fixed deposit investments that they were taking. But there's been a paradigm shift from that trend where now T-bills average of about 35% and the banks are doing 17, 18%. Maximum situation you have 20%. So they are no longer competing with government. Previously, their interest expense were very high because they were paying very high in terms of interest expense to their customers. But because they've been able to beat it down, now doing maximum of 20% for fixed deposits, I think their interest expense that they will be paying should be able to come down, and that can actually be accumulated and it can improve upon their bottom line. That is their profitability.
I want to ask you finally about the non-performing loans, seeing that the banks are in a hard place. I guess the natural thing to do is to be careful in lending to customers or clients. Is that what's naturally expected to happen?
Yes, already that conversation has started. There are a number of financial institutions who have slowed down on lending to especially certain sectors. But the retail markets, those in the fast-moving consumable goods, continue to enjoy support from the financial institutions. So yes, there's not been a total cease or a total closure on it, but I'm aware there's been a slowdown in disbursement, especially towards certain firms or certain categories of the economy as we have it.
All right. Thank you so much, Christian Techijan, financial analyst. I appreciate your time. Good to see you. Well, let's turn to the aquaculture sector. Some news from there. Stakeholders in the aquaculture industry are concerned about the increasing cost of fish feed. Chief Executive of the Chamber of Aquaculture Ghana, Jacob Ajika, indicated that the price of fish feed has multiplied by 200%. According to him, the rising cost of ingredients such as maize and soya has led the sector to rely heavily on imports. Speaking to Joy Business, Mr. Ajika further made a call to government to implement some tax waivers and research to discover new ingredients for fish feed production, amongst others.
Recently, we've seen drastic increase in the prices of fish feed, and this can be traced to the rising prices of fish feed ingredients. You know, the feed producers use soya, maize, fish feed concentrates, vitamins, etc. to produce the feed. If you look at our environment at the moment, they are not getting access to adequate soya and maize which serves as their carbohydrate and protein ingredients to produce the feed for the aquaculture industry. So the only alternative is to resort to maybe importing it from abroad. There again, the issues of the forest is there. Then also, if you manage to have access to those ingredients from abroad and you import them, when you get to the port, there is huge import duty waiting for you. So at the end of the day, if they manage to even clear the ingredients from the ports to their factories, after the production is done, the prices of fish feed are quite very, very high at the moment. So if you compare the price from last year till now, you could see that prices have gone up by almost 200%. If you look at the critical role the aquaculture sector plays and the role of feed producers in our business, we think we need some short-term or tailored tax exemption for feed producers. Then we should be looking at medium-term solutions like embarking on aggressive research to look into alternative sources of fish feed ingredients for the aquaculture industry. The fact is our researchers or scientists must take the lead. Then industry can buy into this and also invest into what they are doing. We are advocating that the Ministry of Food and Agriculture and Ministry of Aquaculture Development should have some linkages where the farmers at the Ministry of Food and Agriculture can just produce these raw materials to feed our fish meal companies so that we can have access to these raw materials all the time.
All right, Jacob Ajika there, Chief Executive of the Chamber of Aquaculture. Now, Italian furniture trading giant Casa Tresacco is partnering local artisans and some designers to produce standard furniture to meet the demands of customers here in Ghana. The company is on a move to combine local and international quality standards and making products available at affordable prices. Here's Chief Executive of Casa Tresacco, Massimiliano Trecconi.
But we will make exclusive service.
Right.
So we don't want make 100 clients happy every day, but we want to take 10, 20 clients every day and make a tailor-made service just for them. Exactly.
Right.
Doesn't mean that we, a combine, even because at that time, Ghana, in terms of design, in terms of idea, wasn't mature. But now, whenever I goes around, I found new people that make amazing fabrics, make amazing design. So we want to make a combination with the local artist here, with the local handcraft here, with something that we can import, making something unique.
Right.
But something unique that doesn't mean that costs you an arm and a leg.
Okay.
You know, something that very affordable according to your budget.
Right.
But something unique that nobody else has.
Next on the marketplace, your money tips on Money Lab.
Hi there. Welcome to Money Lab. My name is Nadole Avevo from Allianz Life, and I'll be your life insurance friend for today. So what is life insurance? Insurance for your life. That's very simple. We are talking about you, yes you, or a corporate institution, group and association being proactive about unforeseen events or risks such as death, disability, hospitalization, and covering these risks in life. See you again next time on Money Lab.
And before we go this afternoon, we want to check out the latest headlines on our website, myjoyonline.com. A meeting with Chinese delegation progressing well, fruitful, according to the Finance Ministry. Also, we brought you this story, government unlikely to issue Eurobonds at attractive yields in short term despite securing IMF program. That's according to Fish Solutions. You can read more on our website, myjoyonline.com/business. My name is Daryl. Thanks for watching The Marketplace. We will be back same time tomorrow.